The state Senate this week passed a bill, SB 66, that would cap interest rates for short-term loans at 36%. Now, that might sound high, but the current limit is 175%, believe it or not. About 1 in 5 New Mexico households is considered to be living in poverty. And the New Mexico Center on Law and Poverty says 65% of high-cost lenders have their storefronts within 15 miles of tribal lands. The state instituted that 175% cap just a few years ago. As we get more data and as more time goes by, other states have blown past New Mexico, and we're now bringing up the rear with one of the highest caps in the country. And Thomas, our lawmakers often look at legislation and point out the worst thing that could happen. Should they be flipping that perspective to weigh the cost of inaction?
Well, when it comes to, payday in general, it's kind of like it's that two-edged sword, right? You have on one end of the equation, people who desperately need cash and don't have credit to go through traditional banking systems. On the other hand, you have folks who, well, I'll just say 174, 175% interest, which is just, for someone who has access to credit, it blows your mind. So, I think proximity is a big issue, and that's been addressed in some of the legislation that's been addressed. But it's easy to say that business and industry should not exist. At least 175% cap not exist. Other states have clearly shown that you can make that industry work with 36% or even lower percentages. That coming from the Santa Fe Reporter.
Mm-hmm. And also the military. 36% is now their number. It's not a free-for-all anymore. I'll go right to Julianne on this. You've been doing a lot of coverage now that Tom mentioned the reporter. Let me kind of get you to back up just a quick second, and your sense of where the temperature of the legislature is to make change of this type anyway. This is a big change when you really think about it.
Yeah, and so this is a reform measure that, as you mentioned, has been, in play. Folks have been advocating for this change for quite some time. It was just in 2017 when New Mexico decided to put a cap on this type of lending at all. And as you mentioned, the cap is triple digit, which is, I think, ghastly to folks who are, getting caught in this kind of spiral. And as Tom mentioned, it just seems to those who have credit, an incredibly high number. As you mentioned, the federal government has already taken a stance on this when it comes to members of the military. You can't issue one of these loans in any state in the nation to a member of the military at higher than 36%. And I think the backers are saying every New Mexican ought to be treated the same as a member of the military when it comes to this sort of gouging type of interest. So you've seen this measure already move out of the Senate. It's now stationed in the House. It's been assigned to the House Commerce and Economic Development Committee, and it's also assigned to House Judiciary. And I think one of the questions that's going to come up and that is already on the minds of the folks that are pushing for this reform is what degree will the industry's spending have an impact here as the House debates? We know that this industry has made sizable contributions to politicians, hundreds of thousands of dollars in the last decade. And, it's kind of an open question here as we move to the House, where the debate is going to center. And then, of course, do we have time before March 20th for this to get to the House floor?
Mm-hmm. Ed, interestingly, when I listen to Julianne talk about this, it really reminds me how deeply ingrained politically and socially storefront lending is in our state. I mean, this is like a very familiar part of our retail establishments. If you drive up and down main streets all over New Mexico, there's a lot of power there in that industry. But is there another way to approach this as opposed to just percentage fixes, 175 versus 36, that kind of thing? Is there something else that can be done here?
Well, I think the operative word in this whole conversation is predatory or prey. And can you say loan shark? And things have changed so significantly since the time that we really look at the very high interest rates associated with this type of lending. Other states have mandated a lower interest rate, and some of those companies that have shops set up in other states have accepted the lower interest rate, but we haven't. So this idea that other that these loan businesses would move elsewhere. Well, they've already moved elsewhere and accepted the lower rates and are still here. There are a lot of things that I think we can do. This is a real problem for those who can least afford it. One of the ways to approach this too, if we don't want the legislature to handle this, is we put it on a ballot as a ballot initiative and let the public citizens decide, how they want to deal with this issue. But this is a real problem, and as I mentioned earlier, it preys on those people who can least afford it. So because we are probably last amongst those states who have really aggressively dealt with this issue, I think it's important to take a hard stance and do something this session.
Good point there. Tom, interestingly, this 36 number, Julianne mentions the military, of course, but we've got California, New York, Texas, Kansas, Florida. These people are all working under a 36% scheme. They haven't had people flee out of there and not make loans anymore. Is this, this idea that it's going to ding all these mom and pop ownerships? But it turns out a lot of them are very large corporations. They're not necessarily mom and pop storefront operations. Can't we just bite the bullet and just go there and see how the marketplace shakes out?
It wouldn't be the first time.
That's right.
We've seen government intervene in many different ways over the last year, in ways that we never even fathomed. So, you could do that as a science experiment. I think other states have already gone there and really tested that already. The larger issue at play. Obviously, the predatory lenders, or the 175% cap, lenders, is definitely a concern. But when you look at the most vulnerable New Mexicans who are really relying on that as a last resort, why are they doing that? Okay, chances are because there's an auto shop, maybe a roofer, maybe somebody who's holding something over their head saying, "Hey, I need my cash now." Mm-hmm. And so you have this cycle of that just happens to end with the predatory lending. Is it all the predatory lenders or all the the loan reform that's needed? That's one aspect of it, but there's a whole other sequence of events that takes place before somebody gets to that point.
Mm-hmm. Hey, Julianne, the Catholic Church of New Mexico and other faith groups say this is a social justice issue. Senator Katie Duhigg says allowing a 175% interest rate is like giving poison food to a starving person. You guys had that quote in your publication as well. Your sense of how that side of the argument is impacting the overall argument?
Yeah, we've gotten a lot of feedback from readers who weren't really aware of the situation. And I think that most people, when they hear those numbers, their reaction is, that's not good. That's not cool. I think if you look at the other states that have not regulated this industry, we're talking about Oklahoma and Mississippi being the other two states that are not doing a 36% cap. There are also 3 states that have no regulation about this. I mentioned New Mexico's cap is still a cap at 175%. So really, it's not experimental. This regulation. I think the people who are pushing for this have made that argument fairly strongly. On the point of the mom and pop storefront, the reporter has asked repeatedly for a mom and pop storefront to make themselves known and talk about their family business being affected by this. And we keep getting franchises of giant corporations who talk about, the effects. But if there's a mom and pop storefront lender out there that wants to talk about it, I'm waiting for them to emerge.
Same here at New Mexico PBS. We're with you. Hey, Ed, last question real quick. Attendant to this effort, this comes up a lot. This came up actually 4 years ago with this 175 cap legislation. Is the idea of financial literacy and somehow tying financial literacy efforts, lessons or classes, something to these loans. Does that make sense to you in some capacity? Do these people have some obligation to teach people how to better manage their own money, or is that something they just don't need to get into?
Well, it seems to be a quasi-moral obligation, whether the storefronts, the small high-interest loan places, whether it's their personal obligation, it is a social obligation. We know that there are credit unions and banks who are already engaged in that type of financial literacy education. Often these people, individuals who find themselves underwater as a result of these payday loans, will sometimes go to these banks or credit institutions, and as a way to get out from under this debt, sometimes these banks and credit unions will loan money on the condition that some sort of financial literacy courses, training, or education takes place. So this really is a key component. Going back to some of the points that Tom made, as the people sink deeper and deeper, there needs to be a way to recover. And education is almost always the key to any issue.
Yep, some folks are talking about a required course in high school and all kinds of other things. We'll have to leave that there.